Right, just keep an eye out on Varun Beverages. That was one of the big movers in yesterday's trading session. Today, it opened lower, and from those lows, the stock has taken off. It's up 7.5% from today's lows, currently at the high point of trade. Today, we did speak to the management. It's been a big wealth creator, and on the recent foray that the company had in terms of an acquisition of a company in South Africa, we spoke to them on various things, and here were the key takeaways that the management said. One, the Pepsi market share in Africa is close to around 2 to 3%. They can triple it in the next 2 to 3 years. So that is a big positive. EBITDA addition immediately from this deal in the next year itself will be about 250 odd crores. That will be on account of higher salience of Pepsi coming in, because currently, the company that they've acquired, 80% of their volumes and revenues coming from non-Pepsi brands. So higher salience of Pepsi would mean better margins and better revenues as well. The EBITDA could increase by 250 crores. On India business itself, they expect the India business to continue in double digits in terms of volume growth with 22 to 23% margin. No capacity headroom as well. Last year they had a capacity headroom, or rather headwind, and now they've added close to around 45% capacity for the next year. And this capex itself can yield additional revenues of nearly 3,000 crores for the next year itself. Sting, the product that we're talking about as a volume driver, was 7% of volumes last year, will be 20% this year, and they've launched a new variant which has done well in the market as well. And finally, they ask about headroom for growth in India. The overall FMCG universe in India is 11 million outlets. Pepsi sells only in 3.5 million outlets. So the next leg of growth for them will be increasing their direct market reach. And if that were to happen, they can triple their revenues from here itself. That's about Varun Beverages. On Devyani as well, they said that they are looking to expand their presence. 250 stores this year is what they've added. 250 to 300 next year. Even though consumer sentiment hasn't fully recovered, they are investing ahead of that. And on their Thailand foray, they said that there is strong potential in the Thailand market, and they aren't taking away from any Indian allocation or Indian management bandwidth. It is separate because they saw that as an attractive opportunity.
But do they want to expand a lot more in Thailand or any other overseas acquisitions or geographies?
Thailand, as of now, they did not comment on others.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.